Hi everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments weekly talking points for the week ending October 8th, 2021. Let's get into stocks. Most of the major indices reported gains last week, with the U.S. stocks rising toward week's end after it indicated Congress would vote to extend the debt ceiling for several weeks. So we saw the market go down, but then at the end it kind of went up. The S&P rose 0.83, so marginal gain there. The NASDAQ was only 0.1, and the Russell was down 0.37. Now, the overseas developed markets rose 0.3, but the emerging markets gained 0.86%. The U.S. in large caps outperformed small caps, and value outperformed growth. We see this all the time. It's like, well, Joe, I'm up 20% here, or they're up 30% here. Why are we up 10%? Why am I up 7%? There's value, there's growth, there's cyclical, there's core, there's emerging markets. There are so many different indices, and you have to make sure that we're allocated the right way. So some are going up, some are going down. Depends on, of course, what your risk tolerance is, what your income needs are. You're going to be allocated a certain way. So we're finding it, the more we try to let you know about how all the sectors work, you can kind of see, because last year, growth far exceeded value, right? Small cap crushed it because of the technology after pandemic. But the value was lackluster because things still haven't opened up. So we're seeing things change back and forth a little bit this year. It's been a little bit interesting. So by sector, energy and financials led, while real estate and healthcare were the laggards. In fixed income, interest rates rose and bond values fell last week, while the benchmark 10-year treasuries rate rising 13 basis points to 1.61%. Now, rates rose despite a major disappointment in September employment figures released on Friday, which calls into question when the Federal Reserve will taper its bond purchases and subsequently raise the Fed rate. Despite last week's rise in interest rates, the 10-year yield, which is stated yield minus long-term inflation expectations, is still below zero, indicating that investors are losing value after adjusting for inflation rate. That is very true. We're seeing that already. Let's talk about commodities. The price of West Texas crude oil briefly crossed $80 per barrel on Friday before closing at 79.35 cents per barrel, a gain of 4.57% for the week. Oil inventories increased by 2.3 million barrels, which was better than consensus expectations, but expected demand for crude is rising as supplies of other energy sources are under pressure. I don't know if you realize it, but they're actually over $80 a barrel right now. And if you take note, unfortunately, you're going to see this pretty soon. Natural gas is up over 100% year to date. So that's going to be really ugly for us going into the cold season. Let's hope and pray for a mild winter. But we'll be seeing that really soon. We're starting to see a lot of energy go up. So keep that in mind as we're looking at, are we going to be burning wood or a pellet stove, or what are we going to do as alternatives, okay? Let's talk about economic data. New jobs grew just 194,000 jobs in September, well below consensus expectations. We should have 500,000 people is what we were looking for at least, right? Especially since they cut the stimulus. But the rate fell to 4.8% from 5.2% for unemployment in August as labor force participation edged lower. Reduced government employment was the primary reason for the disappointing job growth, they say, while hotels and restaurants were the primary driver of growth. Wages increased sharply as the monthly gain of 0.6% pushed the year-over-year increase to 4.6% as companies are using wage increases to combat the persistent labor shortage. On a weekly basis, initial claims for state unemployment benefits decreased 38,000 to a seasonally adjusted 326,000, better than the 338 consensus estimate. Initial claims were an improvement after a few weeks of deterioration. So job cuts year to date were the lowest on record, with last month's numbers down 85% compared to a year earlier. The report also showed companies announced plans to hire 10 times more people in September versus August. Of course, guess what's happening right now? We're coming into the holiday season. We need seasonal workers, and there's bonuses everywhere, which is why we talk about, how they say transitory inflation. Guess what? When you're paying people from $10 an hour to 15 to 18 plus bonuses, you are going to see the price for goods and services increase. Plus the labor shortage, plus the shortage on material, plus cargo ships, cargo just sitting there at dock. You are going to see. So when you're doing your Christmas shopping, remember, shop early. See what it's going to take, because you're seeing things are changing right now. Don't put your head in the sand. You're going to say, oh my goodness, what am I? Forget about the Tickle Me Elmo this year, right? It's not going to happen. Those kind of things aren't happening, okay? So let's talk about some company news. L3Harris Technologies, a G50 holding, was awarded a $947 million 10-year contract to modernize the U.S. Air Force B-52 electronic warfare self-defense radio frequency systems to protect aircraft and aircrew from enemy radar threats and attacks. That was pretty awesome. Shares rose 6.24% for the week. Roche Group, a G40I holding, which is our international portfolio, received approval from the U.S. Food and Drug Administration to fast-track a process for its treatment for people with early Alzheimer's disease, since the drug has been successful in trials thus far. Shares rose 6.95% for the week. That's it for us for right now. Thank you so much for being part of our ARA family. We want to thank you, and if you need to contact us for any reason, you know the number, 855-756-5700, or visit us online at aradvisorsinc.com. God bless you. We'll see you next video.